All right, so let's go on to setting up our chart of accounts. On the next slide, if you zoom in here, and if you want to pull this up through the drive and look at it yourself rather than trying to squint through the video if it's not too clear, we're going to start with the right three columns here. The right three, income, cost of goods sold, and operating expenses, are all part of the income statement. On the left side, assets, liabilities, and equity all belong in the balance sheet. Right now, if you kind of look at what types of accounts are on which, you'll kind of be able to see how the balance sheet and the income statement are separated. But for now, I'd like us to just start with the income statement and start building out what we need on the day-to-day operations of the business, right? And so for the first column we're going to look at is the income section. And we're going to simply do cafe sales and merchandise sales, right? So imagine a coffee shop. They're going to sell coffee and maybe they're going to sell some mugs. So we should have two income accounts for coffee and mugs or any type of merchandise like t-shirts that they want to sell. So let's go over here to QuickBooks, transactions, chart of accounts. We're going to hit new and we're going to write cafe sales. And our account type, I'm going to scroll down and I'm going to find income. You're going to see in the detail that this says discounts, refunds given. Now, really, from an overall perspective, it doesn't matter what you select here because the way you organize them and the way that they come out to how the CPA sees them and how a business owner would look at reports, the detail type doesn't actually make too much of a difference. But let's keep it clean and let's make sure we pick the right stuff, right? So for an income type, we're going to do sales of product income because we're selling our product here, right? Now you can see there's a service and fee income line. This would be something that's more in line for, let's say you're charging someone for bookkeeping services, or let's say you're doing consulting services, or let's say you come and do landscaping, right? Because landscaping is a service where you would go and cut their lawn, but they're not getting something at the end of it, right? Your product, what you're selling them is not the bag of grass that you've cut at the end of it. You're selling them actually cutting it, which is the service. So here, since we're selling coffee, we're selling like a physical cup of coffee, we're going to use sales of product income. And you can see there's a make this a sub account, but we really don't need this right now. Where that sub account comes in play is where we have some of these examples where you have a colon and then several different items, right? But again, this is probably a better example of that utilities, and then you have insurance and electric water underneath. But yeah, so we've set up our first one, which is cafe sales. The next one we need to set up is merchandise sales. So let's go ahead and set up that as one. As one. We're going to hit save, and we can do save and save a new, which just throws us into a new one. But I'm going to hit save just so you can kind of see how this looks without hitting the save and new. Go back to new. We're going to hit merchandise sales. Again, this is an income account. And again, this is a product. You're selling something for real. So we're going to hit save. Let's go back to our chart here. The next that we have to set up are COGS, cost of goods sold. I will get into why cost of goods sold are different from OPEX later when we're actually reviewing the income statement. But for now, I want you to kind of look at setting up these COGS in the way that I am. So we're going to kind of go through, and I know these aren't, I know these aren't in perfect order, but think about everything as cost of goods sold as directly related to selling your cup of coffee. And again, as you do examples and as you set up your chart of accounts, you'll kind of start to understand the relationship between why something like your monthly insurance for liability insurance isn't really a cost of goods sold and why dairy and grocery is a cost of goods sold. Now let's go ahead and set these up real quick. The first one we'll set up is merchandise purchase. And then if you scroll down here, you'll see a cost of goods sold. And here you'll see cost of labor, equipment, supplies, materials, freight. This is the supplies and materials. I'm going to hit save, and I'm going to use the save and new button this time to make this go a little quicker. When you do save and new, it will set it up as the same thing that you did last time. So the next one we need to set up is dairy and grocery. And if you'd like, you can set up your account name to be something like this, dairy and grocery costs. So I'm going to go ahead and set up a little more granularity. And what I'm doing here. That save and new button again. The next one is going to be baked goods. So why is baked goods on there? Looks like we might be selling croissants or other things that we're purchasing. So baked goods cost. The next one's going to be coffee and bean supply. Equipment rental. Now remember, if we hit detail type, we can see there's an actual detail for equipment rental. So we can go ahead and select that. And the last one is paper cups and goods. Put that as supplies and materials. Save and new. All right, so that takes for the first two columns. Let's go to this last column. We have OPEX, and let's just fill in our chart of accounts and make sure that we have it. Now, one thing I also do want to quickly go on a side tangent about is, let's say you kind of are setting up a fresh set of books for somebody you don't know. One, you have the community. If you want to come ask me, I can help you get a chart of accounts that works for you. But two, you can always ask something like ChatGPT, hey, I have a cafe business that has really simple transactions. It only has a bank account and XYZ. What type of chart of accounts should I set up to generally encompass all the transactions that I'll need to see? And it'll give you a list of all the chart of accounts that it probably thinks that you need. And it's probably going a little overkill, but it's a great place to start if you really need to understand what's going on. I'm honestly a big advocate of using ChatGPT. It's not going to do all your work for you, but it can lead you in the way to understand what you really need to know. So let's go ahead and get the rest of these OPEX accounts set up. We're just going to go through and, we're going to pick the right detail type and we're going to see what we need to do. So the first one is advertising. And this is an expense. An expense. Here you can choose different expenses. Obviously, this is advertising or promotional, so we're going to keep it there. Hit save and new. The next one is small kitchen tools and supplies. And we're going to make this a materials account. Here we have a utilities and then two sub accounts. So let me show you how to set up a parent and two child accounts for this. So we're going to use utilities. We enter expenses, and then if we scroll down, you'll see a utilities option. And then we're going to say utilities parent if you really want to have the description in there. The important reason of having a description or just understanding what the parent account is so that you don't actually book something to it. The idea is that if there's a parent account, you're only booking transactions with a children account. And we'll look at this later as we start to review transactions after we do our first months of books. We're going to hit save and new. And to put a utility account underneath, because remember the two sub accounts was insurance, electric, and water. So we're going to do insurance expense, and we're going to make this a sub account of utilities. And you'll see this kind of branches out like this. Water and electricity expense. And then we're going to make it the same sub account of utilities. Okay, so you'll see you have two sub accounts under utilities now. All right, save and new. Let's move on to the next one. Bank and processor fees. And processor. We're gonna look for something that makes sense here. This is one of those things where the detail doesn't matter too much, in my opinion. Because if you put it under finance costs, to me, that's more of like an interest expense that you're paying. But this isn't an interest expense. Oh, there we go. It's a bank charge. Anyways, so kind of see how my thought process was going there and how I was looking at things. right, so let's hit save and new here. Um, I accidentally left this checked, so let's uncheck that and then hit save and new. Let's go back to our chart. The next one is going to be lease expenses with two sub-accounts, rent and repairs and maintenance. So let's set that up. I'm gonna say, go back, what is it? Lease expenses. Account type expenses. We're gonna call this rent or lease of buildings. And we're gonna make this a parent account, so we're gonna leave this checked. Can put in a description if you need, but we're gonna hit save and new. You're gonna say base rent, or you can just say rent that's paid. We did not name that rent, we called it lease expense. All right, so have that one set up. Let's hit to save and new. Then I'm going to say repairs and maintenance. Also, you can type and if you want, but I just really like using this for some reason. I've gotten super used to it. I'm going to select the parent account of lease expenses. I'm going to hit save and new. Uncheck that up sub account box so we don't get confused later. Dues and subscriptions, we got 4 more. Let's get them done. Dues and subscriptions. And we have an account for that. Or a detail, sorry, for that. Office supplies. Office in general, administrative. Payroll wages paid. Wage expenses. Last one is interest expense. Now, in some, you might want to put this in an other expense so it categorizes it out. And I'd like to do this here just so that we can holistically see the income statement. But if it's as an expense, it doesn't matter either way. It just kind of depends on how you like to see your report. I like to see it under other expense. So if you're setting it up for the first time, I like to show interest at the very bottom. I'm going to hit other expense and we're going to look down here and we're going to put it under other miscellaneous expense because I don't really see exactly the one that I have. Now, under expense, there was one called finance charges, and if you wanted to keep it within the core, you could put it there. I think that's a good place to put it. But I'm going to put it under other expense and other miscellaneous expense. And since that's the last one, I'm going to hit save for now. So now, if we review what we have here, you'll see that we have a profit and loss kind of built out from front to end. It organizes it starting at the sales level. So we'll see cafe sales, merchandise sales, a couple of our default accounts. If you try to archive these, some of them will go away, some of them won't. So I try to just ignore them. Then you'll see all of our cost of goods sold organized here. And then you'll see all of our OPEX with our interest at the very end.